Markets Now is brought to you by Durastack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastack Technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
Welcome to Markets Now. I'm Michelle Rook with Randy Martinson of Martinson Ag. We did see some higher closes in the grains and hog trade. We were mixed over in the cattle market. Okay, Randy, let's start off talking about the grain trade. Wheat futures looked like they were the leaders. Is that market seeing technical buying, or are we finally trying to put in a little bit of weather premium?
Well, it's kind of odd that we're saying wheat led the charge, but that was the case today. And I think some of it is weather. I mean, we're talking about some brutally cold temperatures moving across most of the midsection of the U.S. Well, it's actually going to move all the way across, even into the Corn Belt and up into the northeastern region. So I do think that the cold temperatures help push the market here a little bit. We're also seeing a little bit, I think, of some technical support because wheat is trading at the bottom end of its trading ranges and does need to see a little bit more of a push to kind of give us a little bit more of a comfortable room towards from the bottoms.
The wheat market, though, pretty difficult for it to sustain a rally, right?
It is, especially when we're looking at, stable winter wheat acres. I think some of those might be planted just for, grazing out of calves once the wheat starts to break dormancy. But overall, with the acres being unchanged and with world production being where it's at, it's going to be tough for the U.S. to get to see the prices push too much more.
Do you think the grains, especially wheat, reacted to the fact that President Trump backed off of his EU tariff threats?
Yeah, I think there was a little bit of support from that. I mean, now all of a sudden we're not going to see tariffs put on the European Union. The European Union has come out and said that they're going to go ahead and push through Parliament their a trade agreement with the U.S. So I think all of that turned out to be somewhat supportive to the grains today as well.
The corn market, did it just follow wheat on Thursday or what?
Well, I think it did. I mean, there was corn didn't have much news of its own on Thursday, so it was looking for some direction. We have been seeing some good demand, but we also have, plentiful stocks, just like in the wheat side of things. So I do think that, part of it came from following the wheat market. Part of it came from the idea that we're still talking about the possibility of having year-round E15, and I think that added a little support too.
Although let's talk about the E15 proposal, because the ethanol groups had brokered a deal with the oil industry to try to get it into the approps or the spending bills. It doesn't look like that's going to happen now.
It doesn't. I mean, it looked like it was being put in on this morning, on Thursday morning, but by afternoon it got pulled out. Now they're looking at possibility trying to get it in front of Congress sometime in February. Part of it is, I think, to let some of the congressmen that are a little bit opposed to the biofuel side of things to become more palatable to what they're looking at doing.
Corn market is still facing resistance at what, 425? We can't seem to get above that level.
That's right. I mean, we kind of, we dropped our trading range down about 20 cents after the report came out, the final crop production report. So we're looking at that 425. If we can break above that, I think we're looking at 435 as the next level. But that's the top end of the range that we could be looking at here, I think, in the short term.
Well, and the problem is that once you get above that level, you start to get some farmers selling, don't you?
Exactly. There's a lot of movement, a lot of corn. We saw that in the stocks report that, farmers are sitting on about, 2/3 of the supply. So there's a lot of corn that has to come to town yet. And any little bit of a spike towards $4 cash brings out a lot of bushels.
I think the frustration, too, is we've had such good demand. We're on record pace for exports. Ethanol production is at record levels, yet we can't get out of this trading range. What's it going to take?
That's a good question. I think right now, I mean, if we could, none other demand source, or at least, the idea that we could see, bushels get trimmed a little bit, 17 billion bushel production is a pretty daunting number to fight through. And, like you said, exports have been a record level. It's likely that they're probably going to be increased in the next report just because of how strong the demand is. And ethanol continues to improve, but we need something more to help chew through that 2.2 billion bushels.
So the soybean market was mostly higher. We actually have been seeing a lot of strength in the soybean market the last few sessions. Is that been hopes about China, or where is that strength coming from?
I think it's a combination. When you look at China, we kind of seem to be a little more comfortable with the numbers through China. They're looking at buying, or they bought their 12 million that they talked about. They said they're going to be honoring the 25 million metric ton that they said they'd buy for the next 3 years. So I think there was a lot more comfortableness with the trade deal with China moving forward. So I think that's helping to relax some of the uncertainty concerns. We're also seeing, decent demand as we continue to see some pretty good export sales, as we still seem to be competitive in a lot of the other countries for exporting soybeans. So I think it's a combination of that. I also think that soybean oil and the idea of the biofuels with the EPA coming out with the new numbers, I think is also supportive.
So Randy, when we talk about China, there's a lot of discussion that they've already met the 12 million metric tons for this marketing year, for at least the first year of the agreement. When does the 25 million metric ton start?
Honestly, I wouldn't be surprised if they kind of stay out of our market here for the short term. And that seems to be kind of the indication we're getting from the administration. Right now, I would bet that we probably won't see them come back in our market and start buying until August.
Unless we have a weather problem in South America. And where are we at right now with that? What do you think? Are we seeing enough problem in Argentina with this dryness and parts of Brazil that we're putting a little weather premium in the soybean market or not?
Oh, I think so. I mean, especially, Argentina continues to be probably the one that is drawing most of the attention, because they continue to be extremely dry in the southern regions. Now, Brazil is talking about seeing the same scenario play out for the center south. So I think that is some of the weather premium is coming back in. It was interesting that CONAB lowered their soybean production earlier in their last numbers that they released. So it is starting to become a concern, and I think that is the market is starting to pay attention to it.
So part of the problem today is we kind of got stopped out in the soybeans around the 200-day moving average, right? That's continuing to be pretty stiff resistance.
That is stiff resistance. And, we need to see something more to come into play, I think, to help push that market through that. So, right now we're kind of void of news in the US other than the cold temperatures. But if we can all of a sudden start to see shipments pick up and see other countries demand, that would certainly help to keep that soybean market rolling.
And you have been out at meetings, and there's a lot of discussion about acreage already and what to plant. Is there anything profitable to plant, right?
Well, that's the question everybody's asking. And right now, it's kind of hard to say that there isn't anything at this point. But, we're always hopeful that, spring we'll see something different. And, at this point, soybeans with an ending stocks estimate at 350 million bushels, that can change pretty quick with a little bit of a weather issue in South America, a little extra demand in the US. We can trim that number pretty quick. Corn, the production has been able to exceed itself more than we anticipated. This year was a perfect example of that, whereas we can outproduce our problems. And so, wheat or corn and soybeans seem to be the ones that are still grabbing the most attention.
They are. And which one is right now going to have to bid for acres, do you think?
I think at this point, it's probably going to have to be soybeans that'll have to bid for the acres. Corn, I think, is going to have a little bit more of an advantage just because of the strong yields that we saw, especially in the Western Corn Belt, where corn was king last year.
And the cattle market ended mixed on Thursday. We're still trading within last week's ranges. The chop here, not unexpected going into a cattle on feed report, right?
I mean, we got two big reports coming out for cattle. We've got the cattle on feed report on Friday that's going to bring in and tell us, how many heifers are in the feedlots. And that'll give us our first indication of potential retention. The next week, we've got the cattle inventory report. And then, both of them are going to be pretty important to the cattle.
But if you get a favorable cattle on feed report, do you think we can continue to push through these overhead resistance areas at last week's highs or not?
I think we can maybe test those levels. I mean, I think the big number that everybody's shooting for is to close that gap that came into play at about the middle of October. And that's kind of the target I was looking at. I don't know if we're going to be able to get to that now. The trouble with cattle is they always fade a friendly report just because everybody's kind of worked it in. So that's my fear right now, is that we could be looking at a friendly report and the market has worked most of it in with the gains that we saw this week.
The bigger key or the other key is going to be cash trade, right?
Cash is always king in this market, and we've been seeing some pretty good sales, especially when you look at the feeder cattle on the auction rings. Fat cattle, that's going to be pretty interesting to see where that follows this week.
Gotcha. And hogs just keep hitting new contract highs in those back months, don't they? Is that a cash-led rally, or what's pushing it?
Well, I think it's tied to the cash side of things. I do think that they're expecting a little bit more demand later in the season, so I think that's adding a little bit of support to this market as well.
All right, thanks so much, Randy Martinson with Martinson Ag, and that's Markets Now.
Markets Now is brought to you by Durastack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastack technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.